I wouldn't be in a hurry to go public.
Okay.
Why do you need to? Do you need access to capital?
And that's one of the questions I was going to ask you.
I'm Marcus.
Marcus, Abe Issa. Good
Nice to meet you. So where did you say you were from?
Born in Beirut.
Born in Beirut, just like me?
Just like you.
We're Beirut brothers?
Beirut brothers.
And what's your business? Tell me about it.
So I started Global Efficient Energy 3.5 years ago. We're estimated to do 60 million in sales this year.
How much?
60 million.
Damn.
And the difference is we're a green energy solutions company. We do solar, but unlike solar panel sellers, we educate the homeowner on energy conservation, energy efficiency. So we're selling a whole system. You'll have solar, and then we'll do a free home energy audit. And one of the biggest energy savers in a house is spray foam insulation in the attic. 25 to 50% savings.
Is
So
it capital intensive?
it is,
How?
because you've got to purchase the material and
So
the
warehouse
products to
full
do.
of product?
We've got right now on the books, I think, 2 million worth of inventory. We own it free and clear. Actually, the company, zero debt. But the deal is right now, solar energy efficiency, it's a gold rush. Everyone's trying to acquire as many customers as they possibly can. So we really have to accelerate and grow the business right now because I'm wanting to IPO, hopefully sometime in 2016.
I wouldn't be in a hurry to go public. Why do you need to? Do you need access to capital?
We're looking at either a debt piece, maybe a mezzanine financing, or we're looking for the right strategic equity partner.
If you think about going into the public market, the valuations are going to be based not only on cash flow, it's also going to be EBITDA, right? Your earnings
Right.
minus CapEx. Do you have a lot of CapEx?
We don't.
And so that's a big win for somebody. You don't have a lot of debt. So that's a big win for somebody. I think going into the public market with 1 to 2 times leverage is very safe. And so it may be not a bad idea for you to raise a little bit of money and even do a dividend recap and put a little money in your jeans, because you don't want to take a company public with no debt, because you've basically given everybody the working capital.
Right.
All the
Makes
cash
sense.
that's in the business, you just
Yeah,
gave it
makes
away.
sense.
You can't get bank financing?
We've got a bank line,
How
but
much
it's
do you have on the
1.5.
And what's your cash flow right now?
This year, if we do our 60 million, I mean, our net margins will be 15%.
So you make 7.5?
Yeah.
And so you should be able to borrow 10 to 15 pretty easily.
I think one of the biggest holdups has been we're going through our audit.
So I would get your audit done, and I would go look for traditional bank cash flow financing. Take the first 10, even if it's 4 or 5%, and see if you can push the market. And if you say to yourself, holy cow, if I had 100 million, like
Yeah.
what would I do? And then over time, I would look for some mezz. I would not find an equity partner unless I thought that it would add some cachet to it, and do a either licensing or rev share model, so that your licensing and rev share model can outpace your cost of capital on the other side. I would full throttle it.
Okay.
Because it sounds like your growth has been explosive. What an exciting company. Good
Passion.
luck to you. Nice
Appreciate
meeting
it.
you,
Thanks
by the
a lot.
way.
Absolutely.
Nice meeting you.